Hi, and welcome to FreightWaves Corona Freight Market Special Edition Show. Tuesday, April 14th,
It's the
2020.
14th,
And basically, my name's Kevin Hill, here with Michael Vincent.
That's right.
As always, this is our bi-weekly show
Yeah.
to give you the update on the coronavirus and how it's impacting the freight markets today.
Right.
And
Do we have LinkedIn, YouTube, and Facebook open for questions or anything?
we do, yes.
Good.
Dooner is texting me or slacking me all the messages out there, so we're live on those mediums. And
Great.
And basically, give us your comments, questions, thoughts on what's moving the freight markets right now.
Right on. So let's get started, right?
Let's get started.
All right.
By the numbers.
By the
What are the
numbers.
updates to the cases and all of that good stuff?
Yeah, got it. So last Thursday, we were at 434,861 cases. We are now at 587,815. The deaths were at 14,814. We are now at 23,654. And when we started this on March 17th, 6,344 cases and 110 deaths. So, not good trends to see that. Even though the curve is flattening, right, and we're seeing some positive results from social distancing and following those mandates, which is good to see. Those flattening curves and lower case counts on a daily basis. Still, 23,654 and 587,000 cases is nothing to be flippant about, but. So, according to the IHME, Institute for Health and Evaluation at the University of Washington, we are 1 day since peak. So the peak was supposed to be yesterday, and that was projected to be at 2,151 deaths per day. It was actually 2,007, which peaked on the 10th, which hopefully we won't see a bump up, and we've hit that peak and come down, right? So the peak was actually on the 10th according to the numbers. Now, I'm not predicting anything. I'm just saying yesterday was supposed to be the peak at 21,000. It was actually on the 10th was the actual peak. Total deaths projected is still around 68,000, and it used to be 61,000, which I'm not sure why that is, but they moved that out a little bit. It doesn't appear to have adjusted with the change in the peaks and that type of projection yet. So. But some good news on this site is, in the numbers, is the daily new cases have dropped for 3 straight days in the U.S. and 4 days worldwide, and the deaths in the U.S. have dropped 2 days in a row and were flat over the previous day. Worldwide, 3 days of a decrease in number of deaths day over day, and then 1 day of flat.
Yeah, and really good news coming out of New York the last few days with hospitalization rates, right?
Right.
Yeah, so
hospitalization rates coming down. What is it called? Intubation. Number of needing intubation has been dropping as well. So all good news. Not time to relax and say, hey, let's get out and party and do things. We need to keep to what we're doing right now. It's working. Appears to be working right now. Let's hope and pray that the numbers continue the way they are and start going down quickly. But what we're doing is working, so let's stick to it and keep doing it, right?
Right, exactly right. So basically, social distancing is working, and basically, even though we have the apex, it's going to be a flattened curve. So there's going to be at least a couple, 3 more weeks of misery, really, in the numbers before they really start improving.
It is, and you got to kind of think of it the way we look at the actual the freight markets and the volume levels, et cetera, within SONAR, and looking at those levels. It's fragmented, right? It's coming down in one area, it's coming up in another. It's blowing up in Mexico right now, right? I mean, we have a story about that a little bit later on, but. So, just like the freight markets, it's fragmented. Nobody's on the exact same timeline. So we need to stay the course. And those that are just going into, I guess, lockdown or quarantine or whatever, do it.
very much do it. And we have a couple of viewers here. Hey guys, thanks for the content. I appreciate the dialogue. That's from Chris Ulrich at 5K Logistics, and also John Piper at I believe Peak is Hello FreightWaves from Denton, Texas. So we have a couple of viewers commenting, and we are live, LinkedIn, YouTube, Facebook, FreightWaves TV. So drop us a line, any questions, any comments, and we'll go from there. Now it's time for news. And we'll start off with Andrew Cox over here talking about the Cass Freight Index that was published for the month of March yesterday. What did that tell us, Andrew?
Yeah, Kevin, I'll touch on it a bit. I know that Zach Strickland is going to come on a little later and give you a full in-depth look at that, but we did get the numbers last week for the month of March. So the Cass Freight Index, this is a company that runs something like $30 billion in freight payments, and they create monthly indexes of shipments and of expenditures. So I got some numbers for you. North American freight volume, so this would be the shipment index, fell 9.2% year over year in March. So this is similar to the drop we've seen now in outbound tender volume index. I know that they're different data sets, but we now see that outbound tender volume index is something like 9.5% down. So volumes, and there was another note from that Cass Freight Index that this is probably not the trough. We're probably going to see that trough in April or May. So volumes are going to continue to get worse and deteriorate in the short term before they're expecting a pretty quick snapback towards the end of the second quarter.
Interesting.
Very good.
And you know, I mentioned we were talking about you know, the timeline of the pandemic and you know, COVID-19. So Mexico, what's going on in Mexico, Andrew?
Sure. So a lot of Mexico's imports to the U.S., at least the durable goods, come from the automotive manufacturing sector. Something like 80% of the cars that are produced in Mexico are exported to the U.S. So the transportation and manufacturing leaders in Mexico are they're kind of vying to the Mexican president to allow the automotive workers and the automotive industry to be an essential business. Just like the U.S. and most of the other countries in the world, the Mexican president declared on March 27th that all non-essential business will be shut down for at least a month. And the Mexican transportation and manufacturing people are trying to go against that and just trying to get their workers back in the door as soon as possible.
Yeah, and it was interesting because we talk about the fragmented markets and the different timelines, and in that article they were talking about the automotive officials in Mexico working with the United States to try and make sure that they try and come back online at the same relative time, right?
That's true, yes. So, you know, people like Ford, companies like Ford, Toyota, Mazda, and GM, they all have factories here and in Mexico. So they're trying to look at a reopening at similar times to keep things fluid. But the truth is that the pandemic, we're probably further along in our pandemic battle here in the U.S. than Mexico is. So, you know, there's a lot of worry that pushing people back to the factories too quickly could, you know, increase the spread or stop the slowing of the spread. So yeah, there's a battle back and forth between the Mexican government and the automotive manufacturers in Mexico and the U.S., these massive multinational conglomerates, to just try to safely get their workers back in the door. They've seen massive drops in demand, and there's very little freight moving in between the U.S. and Mexico right now. So they're just trying to get things back to normal as quickly as possible, but while staying safe.
So that's something really to watch there. That the automotive industry, if I'm not right, I mean it's highly linked or correlated. They're highly linked with each other between the United States and Mexico. Correct?
Yes, a lot of the cars that we get, a lot of the American-produced cars or the North American-produced cars do come from Mexico, as well as a lot of the big rigs. A lot of the trucks are made in Mexico as well.
Right, but the parts movements as well for that completion of production, correct? That also is quite intricate between the United States and Mexico.
Yes, it has been for 20 or 30 years now, especially when NAFTA came online back in the late 90s, that the automotive trade between the U.S. and Mexico is tightly woven.
Yeah, so the point I'm kind of driving at a little bit is this timeline. They almost have to come online at the same time, right? If one side's ready to go and starts going, it's going to be difficult to do that without the other.
Right. If the raw parts are coming from are coming from Mexico and coming into the U.S., you would need both factories online at the same time. That's true. But the difficulty here in doing that is that the phases that we have to go through in the coronavirus battle, we're at different levels right now, different phases. We're much further along in the U.S. than they are in Mexico right now.
All right. Thank you.
So, Andrew, let's look at another part of the world. Both, it's still international shipping, and it looks like empty containers are, basically there's been a bump in empty containers returned to Asia from California. What are we hearing about that?
Sure. So Kim Link-Wells, she wrote an article about volumes both of loaded shipments to the U.S. West Coast and unloaded or empty containers back to China, which it's kind of a precursor to an increase of demand. A lot of those sailings come to the U.S. loaded and they go back to China unloaded so that they can then reload and come back to the U.S. So the Port of Oakland basically joined a long list of West Coast ports and ports all around the country that are blaming the coronavirus for a downturn in shipments. So year over year, the data that came in for March were down 10.3%. This was container import decline, so down 10%, and the sending back of ships, sending back of empty containers was down, I believe, 23% from the U.S. to Asia in the month of March.
Interesting, and so the drop in containers going back was 23%. Is that what I'm hearing right?
Correct.
So in March.
Correct.
And when we look in SONAR, and I track this in SONAR through our imports, our daily imports, and at one point early on in March, we were 70% below last year, specific China to U.S. Right, year over year.
Correct. Yeah, we spoke about it ad nauseum for the last couple of weeks.
Right.
Volumes have picked up a little bit in the last week or so, as Zach noted in the FreightWaves Now today.
Because the gap is somewhere around 10% or 11% now, year over year down.
I believe that's right.
Something like that. Interesting, because I mean the trend is definitely up right now, but it is down year over year.
Yes, I mean I wanted to make a note. If you go back into Zach's FreightWaves Now today, it's you see it down significantly over last year, but it's the level the y-axis is actually doubling. It's almost a log scale, so it's like near 5,000 when last year was near 10,000. So they look close, but they're back a couple weeks ago. Volumes were down, like you said, something 60 or 70%. They're picking up, but still down.
Yeah, it's a positive trend, but we're not popping champagne corks yet, right?
Right, and as I've mentioned earlier in FreightWaves Now, it's like at first this coronavirus was an issue of Chinese production, that we're not being able to produce things in China, but it quickly shifted over the last few weeks to a problem of U.S. and global consumer spending lacking. So while the Chinese manufacturing may be back online, we still have a lack of demand from not only the U.S., but a lot of countries that trade with China. The people still aren't buying the goods that would bring those containers over. That's why we still see volumes down.
Thank you very much, Andrew, for those headlines. I have a viewer question for you, Vincent, I believe, from Hakan Yildirim, Energy Transport. Is it realistic and safe to say that the peak has passed? Isn't it too early for that yet?
For the peak of the coronavirus?
Yes.
Well, I'm not a doctor. All I was reporting was.
I think all we're saying is that it looks like it's peaking. We've reached the apex. What comes in after?
I'm not an expert on that. I'm not a doctor.
You just forecast freight. You don't forecast pandemics,
freight.
right?
I forecast freight, not pandemics. I'm not a virologist or anything like that. I'm not a doctor. I don't even play one on TV. All I was pointing out with the numbers was that the peak happened. It appears, if you look at the numbers, that the peak happened prior to when they thought it was going to, like a day, and it was a little bit less. Now they're guessing too, because their ranges go from 1,000 to 8,000 deaths.
You do have
a day.
A freight forecasting, because you do forecast freight. So I have another question here for you from Chris Smith. Are you seeing an increased need for industrial warehouse space or trailer drops?
Industrial warehouse space for trailer drops?
Or trailer drops.
Or trailer drops?
Yeah.
I don't see an increased need in that at this point. Volumes are starting to drop. I think that the tend to drop trailers, just do drop and hook, has increased just to keep the contact and social distancing.
I think maybe going forward after this, you might see a little bit more demand for industrial warehouse space because of, I think there's going to be less reliance on just-in-time manufacturing and keeping inventory levels low. You're going to have some kind of safety buffer in there. I think this is one of the things this pandemic has taught us is it's always good to have a little bit of redundancy. You want to operate as efficiently as possible, but a little bit of redundancy never really hurts. Yeah,
I get the question now. Sorry for that, but it does make sense. That it is a great question, and it's a topic that we really need to discuss discuss, and I think we'll dive into it more and more here at FreightWaves as we move forward and hopefully start coming out of this. What are those changes to the supply chain? What is it that's going to make it preparedness for something like this, or the unknown that is not costly? You can't have warehouses just full of things that you think you might need in case something like this happens. But somewhere in that, how is that resiliency? How do we plan for and have a playbook for the collaboration that we're seeing right now? Like you see within the airline industry, for instance, and across different modes.
Exactly right. Let's shoot over to our next guest right now, Zach Strickland, and he's going to go more in depth on the Cass Freight Index that was released yesterday. How's it going today, Zach?
Hey, Kevin. Thanks. It's going all right, I suppose. How are you?
It's good. What does the Cass tell us?
So, we had the article reporting the Cass numbers come out this week, and, I think one of the taglines was the fact that we saw the most significant fall in line haul rates in the Cass index since 2009. So we need to provide a little bit more context here, and we did see a pretty significant drop year over year in terms of March value. Now, the line haul index measures just the line haul rate, excluding fuel and accessorial charges. So basically base transportation costs over time, and it's indexed, et cetera. But what we're seeing is really a continuation of a trend that already existed. I don't know if applying coronavirus, logic to the index itself is telling the full story. We actually saw a 6.3% decline in January year over year, and we saw a 6.1% year over year decline in February. So a 6.6% year over year in March isn't necessarily as dramatic as it may sound. And again, people are going to say coronavirus, but a lot of what's in this index is contracted freight volumes or contracted rates. So it takes time for those rates to digest the market trends. So what we're really seeing is a correction from those 2018 levels where rates increased significantly, because it took a long time for carriers and everybody to increase their rates throughout several months of increased volumes.
So we have a comment here from a driver in Greenville, South Carolina, and it goes back to the drop in rates, and the rate of change on that is that he's saying, I'm parking my fleet right now due to low rates. And that's something we saw on the Cass index. Going forward, Chris Ulrich from 5K Logistics also has a question here about basically reopening the country in piecemeal. What does that kind of look like in trucking, line haul rates, and volume data to you, Zach?
Yeah, I mean, I've written a few articles recently comparing, trucking to air cargo and the maritime sector, because they've both actually seen expanding rates in the spot market, at least, over the last couple of months. Now, they're very different industries and different sectors of the transportation market, far less fragmented, obviously, and they've both seen supply-side contractions. Now, the trucking itself, has some supply-side issues in terms of it being oversupplied through, a lot of overheated activity in 2018, coming into 2019. Now, what this looks like on the back edge of this, the outbreak is really gray and hazy at this point in time, because 93% of the carriers out there have less than 20 trucks. Qualifying for small business, payroll protection plan, et cetera, from the government loan. So we don't know how much supply side contraction we may see on that end. So that's obviously going to have a big impact on what we see in terms of rate volatility moving forward. But what we do know is that even if demand does come back online here in the near term, it's not going to be a super fast, all of a sudden all the factories are operating at 100%. So demand side volatility may be isolated in pockets in terms of spot market, seeing some spot rates going up, 5-10% here and there. But overall demand in the United States is probably not going to turn on like a faucet.
Do you think there'll be more opportunities for round trip loads going into areas that might not be up and running yet?
Yeah, I think that's, that'd be something to explore, because these round trips, that's what's going to be the biggest problem with capacity. With all this imbalance in the freight market right now, you're going to have certain areas that are heavy consumption, getting more consumption, as people are basically sheltering at home, they're eating more in their house, et cetera. They're staying in their areas, and then you're going to shut down the factories that are producing the freight that's coming out of those markets. So, Atlanta, for instance, heavy consumer market. A lot of people living there, consuming lots of toilet paper, et cetera. But all those factories that are producing non-essential goods, they're not pushing all that freight back out. So that leads to market imbalance. So the round trip load rating is probably a really good solution to that. I mean, that's essentially what the maritime carriers are doing right now. By reducing supply, they're just pricing in some of that market volatility. Not like they're making a ton of money. They're just trying to hedge against a lot of losses.
Yeah, they're trying to not lose $23 billion, right?
Exactly.
So, hey, Zach, real quick, I wanted to go back to this because it's my nature whenever we talk, is talking about the per mile line haul rates from the Cass line haul index. And so January was down 6.3%, February was down 6.1%, and these are year over year, right?
Correct.
And then they had March down 6.6% year over year, is that right?
Correct.
And then we say that it falls in line, so really is there a coronavirus effect there, right? Is there a corona effect there is kind of the question.
Right. Yeah, no.
Given the large spike in outbound tender volumes that we saw in SONAR, the number of loads on a daily basis, we were tracking daily, and then the rejection rates skyrocketing and fragmenting all over the place caused rates to go up, at least in quite a few numbers. Couldn't it be argued that the coronavirus actually had a positive effect on that trend?
Yeah,
and it
absolutely.
could have been fallen by 9% or 10%?
Absolutely. That's probably exactly what's happened, is that since the spot market accounts for roughly 10 to 15% of the activity, give or take, depending on the market, there's probably some buffer in there due to the spot market activity. Again, that's going to be highly concentrated in the consumer products, the food and beverage, et cetera. How much of that is in the Cass index is hard to tell. But yeah, I think just like with our outbound tender volume and tender rejections, it's hard to disseminate exactly what pieces of the equation are pulling it up and weighing it down, because automotive production, as we know, is pretty much at zero right now, but food and consumer products ramped up significantly for about a 2-week period.
Yeah, so different segments of the carriers were affected different ways.
Correct.
Business to business was not the same as consumer packaged goods and e-commerce, et cetera.
Yep.
Very good. Thank you very much, Zach.
Cool.
And basically, our friend from Ocean Audit, Steve Farrar, says it's ugly out in the ocean world right now.
Yeah, I don't doubt that.
I don't either. And Joseph Richard, here we go, at 128 Trucking, says it's definitely not worth the risk right now, with rates where they're at right now.
What's definitely not worth the risk?
Driving a truck.
Oh.
Yeah, the rates aren't worth the risk right now.
Yeah,
is what
we
he's
had
saying.
that question yesterday on what the truck is. Is this a good time to start up a logistics company or trucking firm? And
I don't know. You'd have to have nerves of steel.
didn't ODFL do it during the Depression, the Great Depression? Isn't that when they started up? But I wouldn't recommend it.
Yeah.
Anyways.
Well, now we have Anthony Smith,
All right.
our resident economist, here to talk about the economic data that's out there. What do we have, Anthony?
So, Kevin, there hasn't been a lot of economic updates since of course, ever-growing in popularity, weekly jobless claims or initial jobless claims since last Thursday, so there hasn't been any macro releases. We do have retail sales and industrial production that are going to get refreshers Wednesday, earlier on in the morning, all before 10 a.m., I believe. So really talking to expectations for retail sales coming up here that will reflect March numbers, in addition to industrial production, which will also reflect March. Going into the March results for retail sales, of course, it was very segmented from the beginning part of March to mid-March to the end of March. We really saw the entire, fluctuation from a little bit of a weaker showing in February, subtle gains potentially, really a ramp up, of course, from all the panic buying, a lot of pull forwards, and then, of course, towards the end of March, as we've seen in our rejection data, a lot of those rejections started to come down, volume started to decline. So we're really expecting some interesting results for March coming up here shortly.
So, Anthony, mentioning retail, what do you see the new norm being?
With retail, one of the things that we really hit on early on before all of this really started to ramp up was the importance of stimulus and focusing on small businesses. And so really what we're looking at for retail is the new normal. Is it going to be more weighted to those large and established businesses? We're thinking about Costco, Target, Amazon, Walmart. Those large giants, those large players already in the retail space are likely going to come out of this potentially even bigger than before, while a lot of the other smaller mid-sized retailers that are struggling right now, a lot of the mom and pops throughout the country, are going to be hitting hard times right now. They're not as flexible. I mean, when we're looking at foot traffic, it's going to go to those larger retailers that are able to really take advantage of e-commerce. I know one of the major trends that was really slow to take off was going to be grocery deliveries. I remember when this first came on, a lot of people were skeptical about it. I don't want someone going into my home or delivering my groceries. I know what I want to get. I can pick it out myself. But now that's really starting to ramp up as we're getting a lot more stricter mandates and sheltering in place.
Yeah, so habits are changing, and that's going to definitely have an effect on who the winners and losers are.
And on the distribution center side, Brad Rennert on Facebook says, trying to book round-trip loads to help carriers, but so much waiting time at DCs, putting major strains on it, is what we're trying to do. So even with the retail environment, we're still seeing long wait times at DCs, and I imagine it's probably those consumer staples.
Yeah. And that's what we talked about our friend Jeff Clark last week on what the truck is. He's a driver, and he doesn't have a problem with hours of service. It's the respect of those hours of service by the shippers and the consignees, right, to keep them moving.
Yeah, exactly right.
So, Anthony, what are your thoughts on how we come out of this, right? So we're talking about the winners and losers, et cetera. And I think it was Ravi Shankar, Morgan Stanley, said, he had this report, Q1 2020 is one of the most irrelevant quarters ever, right? What are your kind of thoughts on that, and how does that look moving forward? Will Q2 give us any more information on where we're going in this economy, or is it still going to be in flux and we got to wait and see if we actually do rebound in Q3 or what?
Well, I think first quarter is a very relevant quarter because even though it might seem as a wash, we're always going to look to how drastic Q2 was, not only for year over year, but quarter to quarter growth. So it's going to be interesting to see what kind of momentum we had going into what is expected to be a really abysmal quarter in the second quarter. So definitely expectations for the second quarter is going to be rough. When we're looking at the impact of all these businesses that are being shuttered. We're looking at industries kind of shutting down altogether that are considered non-essential, those who aren't able to convert operations to essential needs, so to speak. So
yeah.
It's definitely going to be a hard quarter, definitely double-digit decline. We're looking at quarter-to-quarter decline, quarter-to-quarter growth. But I think when we're looking at the second quarter, it's going to be most likely the most hardest hit. Third quarter probably be a little bit more breathing room. I expect when we start to see some more industries kind of come online. Of course, it's going to be up to what kind of incentives and what kind of catalysts are built behind some of those demands and how that ramp up is really orchestrated.
Thank you, Anthony. One last question, actually. Les Willis on, I think this is Facebook, he has a question here, and it's about inflationary pressures because of the stimulus and the spending, and here's a bit of his comment. Freight, no matter the mode, is driven totally by consumer spending. The more urgent pandemic within the economy is inflationary pressures that will be placed on the backs of the U.S. populace. You cannot spend your way into prosperity. What are your thoughts on inflationary pressures going forward?
I think it's definitely a legitimate concern. But one of the big things is that we haven't, inflationary pressures are very low coming into. We haven't seen any evidence of any kind of inflation building up. But of course, we're looking at all of this additional spending that is a huge area of concern. Thing is we're kind of on a level playing field, and we're looking at the global scale here. I would think that, of course, this would be a little bit more amplified if this was just solely a US-based situation. But because it's a global situation, everyone's kind of struggling and everyone's doing pretty poorly for the most part. It's just going to really come down to who can kind of get out of this sooner and really start to ramp up activity and not get over encumbered by inflationary pressures and not outspend and become just really left behind, so to speak, when we're looking at moving forward. And so that's really going to make the recovery process a lot more critical when we're looking at in comparison to other regions of the world.
Thank you very much for your insights, Anthony.
Thank you, Anthony.
Thank you very much. And we will get Alan Adler, one of our journalists here at FreightWaves, on the line. And we're going to talk about his story from yesterday, which was the Smithfield Farms, and talking about food logistics and the supply chain and the coronavirus outbreak that happened at Smithfield Farms in
Smithfield Foods, the hog processing
foods,
plant.
Okay. At Sioux Falls, South Dakota. Sioux Falls, South Dakota.
Right.
And I think there's, as of last count, around 240 cases. But we'd have another comment here from Hakan Yildirim, their Energy Transport. You know, he's been talking to a lot of owner-ops and trucking companies lately. And is there federal aid coming to truckers who can't afford to pay their bills? Have you heard anything? Thanks a lot. And I think that's all part of the CARES Act.
Don't they have to fall under small businesses? Isn't it?
Yes, they do have to fall under small businesses, but owner-operators certainly do that.
I would think so.
So you have those small business loans that are available and expanded unemployment benefits, but that's if you go off the road, I suppose, or if you park your truck.
Yeah.
But the CARES Act has, I think initially $250 billion. I think they're adding to that in small business loans. So they're definitely in that.
Right.
And we also have Stan Duncan at Tallgrass Freight writes in, will consumers increase buying in bulk and keep reserves of non-perishables, i.e. prepper economics? You're a prepper, aren't you?
I am not.
You're not.
I'm not. But I have a very, very good friend who is, because he lived through the earthquakes in San Francisco. And so ever since he lived in a little tent city and spent time patrolling armed to make sure, looting and that type of stuff, he has always been prepared. He's not over the edge with a bunker and that type of stuff. But I see that trend.
I definitely do, too. I think this is going to be fresh on people's minds. Some people will buy in bulk and keep, we'll all be preppers going forward, maybe.
Yeah, I think
at least
so.
a little bit.
Yeah.
Maybe not a bunker.
Do we have Alan?
I think we have Alan. Is Alan ready? There's Alan right there. How are you doing today, Alan?
Doing well. Thanks, guys.
Very good. Here's Alan Adler, journalist here at FreightWaves.com, talking about Smithfield and the close down. What did you find out?
Well, I think the story really broke on Sunday, and when we started reporting yesterday, we were fortunate to get to the folks in South Dakota who were closest to this, including I think the most telling comments really came from a family farmer about 90 miles from the plant. He was unable to get his shipment a week ago out. The truck was canceled, so he had 170 hogs that he couldn't get into the plant. He's looking at a couple more delays this week, and I think what happens is you're getting these. I guess that would be part of the logistics backup. The farmers don't have places to necessarily store big hogs when they're ready to go to market. They're ready to go because there's other hogs right behind them. When you're doing 15,000 hogs a year like he is, it's every 28 days you've got a new one born. So one of the sad things that could happen to some of these farmers is that they'll have to destroy some of these animals. But it's unlikely. I talked to someone from the National Pork Council last evening, and he said that they're not going to kill the big hogs. Those are the ones that, even though prices are quite depressed for them right now, those will still find their way to processing. It's going to be the newborns and the young pigs, if you will, that don't have a lot of investment in them, maybe $30 a head. Those will be the ones that will possibly be destroyed. But before that, there are other options. A lot of these farmers do have additional barns and additional space. They can, even though it wouldn't be proper social distancing, they can put these pigs double and triple them up in some of these facilities. So that's one of the more impactful things that I heard. The other thing that's going on, though, is that as you've got these illnesses breaking out, and in some cases it's positive testing only, you're having it back up into the trucking. There were 100 trucks a day that went into the semis a day that went into the Smithfield facility. Those are not happening now, at least for the next couple of weeks, maybe longer. When the company said on Sunday that it was closing, they said it was closing indefinitely. The state, the governor the day before, had only asked for a 14-day downtime.
So the 14-day downtime, if I'm right, was to sanitize and kind of change some of the working conditions inside the plant so that there was proper protection or social distancing while they're processing the pork. Is that right?
Those things were already underway.
Okay.
A week earlier, they had taken about 3 days to clean and to begin to look at some of those distancing things. So they had already begun doing that. What was happening, I think there's a little bit of confusion about this. Whether there are actually 200, and I think the number that we use is 270 cases, those are not all in the plant. Those are around that have spread in the area of Sioux Falls, which has about half of the cases in South Dakota. They're not in the plant, but rather are related to the plant. So as far as what they're doing, I think, from what I can tell, Smithfield is taking all the precautions that most businesses, responsible businesses, are doing. They're protecting their workers, I think, the best they can. And in this particular time, they're paying them for this downtime.
Thanks for clarifying that, because it sounded, when I read it, it hit my brain as half of South Dakota's cases were in that plant, and that's not the case.
That's not the way it was explained to me.
Gotcha.
I don't know exactly how many cases are in the plant.
So this has big ramifications for food processing and food logistics, food supply chain, all across the board, because that Smithfield plant processes about 4 to 5% of all the pork that we consume, and you can extrapolate that a little bit, to the safety, worker safety, definitely, and capacity at other food processing, whether it's be beef, poultry, or produce.
Yeah, I think one of the things, and just a couple of the stats that really stand out about that Smithfield facility, they do 19,000 hogs a day. If the average weight is about 280 pounds, you can get an idea of just how much meat is going through there. It equates to about 18 million servings of pork a day. So if you take that out of the grocery store, so to speak, you can see that not only are you going to be looking at shortages, but prices are going to go up too. And you've got others, and we'll be writing about this later today. You've got other plants. There's a beef plant in Colorado that went down yesterday for 2 weeks. There is a Tyson pork plant, processing plant in Columbus Junction, Iowa, that's down. And so these are spreading. And in all cases, they're having impacts up and down both the supply chain and ultimately at the grocery store where, and this was interesting, it was the executive director of the South Dakota Pork Producers Council who told me yesterday. He said, the real issue here is that people are so used to having what they want when they want it. And that is something that might be a good thing that comes out of this, is that people will understand that every step of the way here involves really choreography to get this done so that we can go buy when we want it. And that may be a change coming out of this.
Right. So, Alan, this is Mike. The question that it begs in my mind is when you look at the export side of things, right? So I think exports for pork in 2019 accounted for almost 30% of all the processed pork in the United States. Do you have any visibility into that and how that could affect that kind of ratio? A shortage on our groceries versus export levels. Is there adjustments that can be made there to keep that flowing or no?
Yeah, Mike, I'd love to be an instant expert on this subject, but I'm not.
I got you.
I got into this yesterday, and I think I'm very fortunate. I cover I cover the trucking manufacturers and some of the big suppliers on a regular basis. This isn't a regular time. So I got into it, but I really don't know much about the import. I know that China obviously imports a lot of pork. I don't know what's happening with the exports at this point. I think some of the brokenness and the kinks in the supply chain are huge, and I think those have to be fixed before you could even address some of these issues.
Excellent. Thank you, Alan.
Great. Thank you. Excellent insights. You can check out Alan's article on FreightWaves.com. Thank you so much for your time today, Alan.
Thanks very much, guys.
Very good. And we have a couple comments here.
Right.
John Piper, again, just got off. Appreciate the live insight to the transportation markets. I was just on a Skype call with a Chinese manufacturer. They're back working and have been for a while. No new cases reported in Wuhan. So that's positive news.
Wow. From on the ground.
From on the ground.
Nice.
And let's see, Les Willis on Facebook. Fourth quarter 2019 saw a huge increase in used trucks, so much so that dealerships were even refusing trade-ins on new purchases. This was exacerbated in the first quarter of 2020. Where do you see the used truck market heading? You can only export so many of these units. And I wish we still had Alan on the line, actually, because that's his real area of
My guess is that the
expertise.
market isn't going to get any better for right now.
I don't think so either.
No, I think
is.
the sad truth is that there will probably be more of a flood of used trucks on the market.
I think so too.
Yeah.
I think that trend is going to continue. I know new orders came in last week, and they were around 7,000 units, which was 50% down from March of 2019 or February of 2019, which was a depressed year in of itself.
Yeah.
So, and next we'll get Eric Kulisch connected here on Skype, and we'll talk about the airline industry, air cargo, passenger
is Eric
travel.
Ready or no?
I'm not sure if he's ready or not.
He's ready.
He is ready. Right there, he is.
Beautiful.
Very good. How are you doing today, Eric? Thank you for joining us.
Great.
Good.
Hello, Eric.
So, in the airline, air cargo area, what are the latest trends?
Well, the air freight industry's, just super busy right now. Is almost exclusively being used to move medical supplies, humanitarian aid for all the COVID-19 relief and getting stuff to healthcare workers. And you're seeing a huge spike in rates, especially out of China to Europe and to the U.S., and then also on the transatlantic market. Because there's scarcity of freight space since so much of the passenger network is down. And, a lot of passenger carriers are trying to be creative to make some money, and while other passenger planes are down, so they're flipping their passenger planes, trying to convert them or use them as cargo planes, quasi-freighters, and that's become kind of a booming business. It's helping alleviate some of the shortages and becoming kind of an extra source of revenue for these airlines.
So Eric, we were both looking into this earlier this morning. When we say passenger traffic is down, I think that might be the understatement of the year in the airline industry. What did we find out?
Right. So, passenger airlines have basically gutted their networks. International travel for a lot of airlines, they've pretty much shut down except for a few, remaining routes. And in the U.S., there's some domestic routes still going, maybe 20%, 20% of the planes flying. But the actual passenger traffic is shockingly low.
4%, right?
Yeah, it's like 2 or 3% of what it was a year ago at this time.
Wow.
Just looking at Transportation Security Administration figures for people going through the security checks. It's just a drop in the 2.5 million people a year ago versus less than 100,000 today. You're seeing people on flights, flights empty with 1 or 2 people on them, flying, cross country. And so the airlines have, they have to keep a minimum amount of service going to satisfy government requirements and just to keep some of their aircraft moving and and maintained, but they're have basically skeleton schedules, and these flights are virtually empty.
Wow. So the removing seats and starting to store cargo or move cargo on the upper, I guess, on the deck, right, as opposed to the belly, or in addition to the belly, is that something that is happening in the United States, or is that been approved by the FAA, or are they still looking at that?
Yeah, so it's an interesting development. So about a month ago, when this idea first started, some of the airlines started doing this. It was flying cargo. As you know, cargo flies in the bellies of lots of aircraft along with the baggage most of the time. It's widely used by shippers. And so they started flying these planes, cargo only mode, no passengers. But, they were only using half the plane or probably even less on a nominal basis. And then some carriers started getting creative and thinking, well, we can put some boxes in the seats, and we got either special netting or these what they call cargo seat covers or seat bags, and that secures the boxes. And it's a little labor intensive versus just loading pallets in the belly, but you can put light boxes of masks and so forth up there. But now some airlines like Air Canada, Lufthansa, they're actually taking some planes and stripping out the seats and now using the upper deck for full use of cargo. Again, there's probably some limitations. They can't put in giant pallets, and they can't put super heavy equipment or weight up there because the structural dimensions, it's not a full conversion like they do for a freighter conversion, when it gets retired from passenger service. So, but it's a creative way to optimize or make revenue out of these planes and maximize the space.
Hey, Eric, this is Kevin. So basically, if airlines are ripping out seats, I guess my question is, what kind of timeline are they expecting to have, like, really depressed passenger numbers? Because these seem to be like long-term kind of solutions. Do you have any sense from airlines just how long they expect this environment to last?
Yeah, I think it's, as the days have gone on, it's gotten more sober. The picture's gotten more sober. That airlines are seeing this as not a quick bounce back, once we get to the end of the summer and everyone's going to just jump on planes and start going on vacation again. I think there's a thought that, people are using up their vacation now because they have to stay at home, or they're not going to have that much disposable income, or they're going to be, fearful of, catching the coronavirus. So, there's going to be very light demand for a while. And, I'm hearing predictions of maybe 2 years to get domestic, 2 to 3 years to get domestic, for domestic airlines to kind of get back to where they were in 2019 as far as passenger volumes in business, and even longer, maybe 4 years or more for international volumes to get to where they were. So we'll see. That might be a little pessimistic, but it's a kind of a bad outlook, and then that means for the freighter industry, there's going to be less capacity because the airlines are going to put planes up until the demand's there. So, the all-cargo carriers eventually should do pretty well for a while once manufacturing and everything picks up.
Yeah, 2 to 4 years of an outlook is pretty bleak. It is. I do have a viewer question for you, Eric. Do you see the European market being inundated with a decrease in air freight? Congressional fodder is pointing towards a huge decrease in the China pharma import due to FDA regs and SOPs and the amount of pullback from China manufacturing. Do you see this as being followed by a decrease in the Euro market? So essentially the question is, do you see the European market decreasing in international air cargo movements?
I don't know if I don't have a good window into that right now. There's so much uncertainty. Who knows which part of the world's going to kind of bounce back quicker. I think Germany was already seeing some softening in exports prior to COVID, but and the coronavirus is, spreading pretty badly in Europe right now. So how and when that all bounces back is hard to say. But, I think governments are trying to help the airlines as best they can with some financial support, and we'll have to see how that goes. But as far as the air freight market, the all cargo carriers, the Cargo Luxes of the world, the Lufthansa cargo fleets and others, they'll be pretty busy once economic activity starts to pick up.
Yeah, so we talk about all the collaboration and the different logistics bridges, that type of stuff. Do you have any insights into the different airlines and some of the good that they're doing out there and how they're trying to help with the response to the COVID-19 outbreak?
Yeah, I mean, it's all hands on deck. I think all these carriers are being enlisted by humanitarian organizations, United Nations, governments. France is operating like an air bridge between China and France with supplies with Qatar Airways. In the U.S., FEMA is contracting with multiple carriers, running what's called Project Air Bridge, with about 80 flights scheduled since the beginning of the month through, into the following weeks into major airports with airlines like Atlas Air, UPS, FedEx, Kalitta Air, National Airlines, and Western Global. And so they're just rotating back and forth with supplies that the healthcare distributors have purchased, and the federal government's facilitating those deliveries. You asked one question earlier about the passenger plane conversions, and that's mostly happened with some foreign carriers. But as I reported this morning, several U.S. carriers are looking to get Federal Aviation Administration authority to do that here as well. So American Airlines, Delta Airlines, probably some others have asked or requested to get authority or get some green light to be able to put some boxes up in the passenger cabin.
Yeah, I imagine they'd be looking at bracing for shifting of load and safety, that type of stuff, right? That's what they'd be looking for.
I think there's some weight considerations and so forth. I don't know that they need to put in extra bracing because I think, as I mentioned before, there'll be netting systems or some cargo bags, and it's lightweight versus something super heavy that's going to slam through the cabin bulwark or whatever and crush the pilot. So, but yeah, they do have to make some weight calculations and types of safety determinations on where and what type of cargo can go up on that upper deck and how it's going to be secured.
Thank you very much for your time today, Eric, and have a great day. And you can catch Eric's air cargo articles on FreightWaves.com.
Thanks, Eric.
Hey, thanks a lot, guys. Great talking to you.
Great talking to you, too.
The list goes on with what the industry is doing,
It is. Everyone is basically innovating on the fly, trying to adapt and be as flexible as possible because the world, certainly logistics and supply chains have changed so much.
Yeah.
You have to be adapt and flexible.
Yeah, you got DHL helping out the Costa Rican government in centralized logistics and warehousing. United is providing free round trip for flights for medical people. British Airwaves is moving 55,000 tons of hand sanitizer, among other things. Swiss is operating 10 flights this month with passenger planes cargo only, 35 million pieces of PPE. Virgin Atlantic's in on the game. Airbus, it just goes on and on. It's amazing to see.
I know, right? People doing good things out there in this environment. So basically, what's SONAR telling us about truckload volumes right now?
SONAR watching it every single day, and it really, so volumes are still continuing to drop, right? But last week, it was kind of messed up a little bit because you throw that holiday in there, and there's that natural drop, and then you really can't look year over year with Easter's hard to look day to day, year over year, right? Or even week, because it's not on the same date. Last year it was on the 19th, right? And then this year it was earlier in the month. And so, but volumes were dropping. the Easter holiday dropped more significantly than it has in the past. But we were seeing some leveling of that dropping. Not that volumes were stabilizing, but they were descending a little bit less quickly. And you still see that a little bit this week now coming into Tuesday. It appears that it is leveling a little. But agree with Cass. The sentiments from Cass is that we're not at the bottom. I'm not calling it the bottom. I don't think anybody here is calling it at the bottom yet. But we're seeing that steep slope start to level out a little bit, and also with tender rejections. Now, the thing is is what you're seeing in SONAR is from day to day the changes. One day you're seeing everything is just red or white there, meaning volumes are just dropping every single place, even in the large markets. Today, there's over 50 markets that volumes rose day over day.
Yeah, and basically some of the markets to watch right now are St. Cloud, Austin, Dallas, Oklahoma City, Jacksonville, and as you said, 50 markets that are up volumes.
Yeah, and it's not just those volumes, and the fragmentation is there, and you can see it in the tender rejections, right? The volumes are up, but the capacity's not there because it's all irregular routes. I mean, there's much more irregular routing than there used to be. So tender rejections in 30-plus markets are up, and it varies between reefer and dry van. So, I mean, there's a lot of hurdles for shippers to overcome right now, even with the capacity loosening and pricing dropping, and there's still plenty of opportunities for carriers to get freight on their truck, and for brokers to really be that added value for their not only their carrier base but their customer base as well, and maintain some margins. You need that data more now than ever.
You do. So we only have a few minutes left, so let's talk about what's coming up this week on FreightWaves TV. And this afternoon at 2 o'clock live, we have Great Quarter Guys, something I host along with Andrew Cox.
Yeah.
And we're going to talk about logistics companies and a great corporate culture and how to protect your business using, how to use non-competes and non-solicitations, but still have a great corporate culture. So that's what we're going to talk. We're going to talk to Carrier Direct about that. Ryan Schreiber will be on. So that's at 2 p.m. Eastern Time here in about an hour, live on FreightWaves TV and LinkedIn, YouTube, Facebook, all those mediums as well. And then tomorrow at noon Eastern Time, we have Put That Coffee Down, which is the Freight Sales podcast that Dooner and I host. And we're going to talk about using video, again, in like sales presentations, demos. Do you tailor it to one audience? Can you mass scale that? And best practices for both of those.
Nice. That's going to be awesome.
And then at 2 p.m., we have Freightonomics, where Anthony Smith and Zach Strickland will be talking about freight economics, maybe even prepper economics or preppernomics. Who knows? But Freightonomics is at 2 p.m. on Wednesday Eastern Time. And then Thursday, the coronavirus freight market update will be at noon Eastern Time.
Noon
again.
live.
It's our bi-weekly show to keep you up to date on what's going on in the freight markets during this pandemic. And then at 4 o'clock?
4 o'clock, freight forecasting.
Freight forecasting. What are you going to be talking about?
Yeah, so I'm going to invite my good friend Anthony Smith and talk a little bit about consumer sentiment, housing starts, how that's affecting, how that looks moving forward, and some imports.
Very good. And then Friday, as always, at noon Eastern Time again. So we have a show at noon every day. So tune in to FreightWaves TV, LinkedIn, YouTube, Facebook, whatever your preferred channel is for that. But at noon is What the Truck. What's going on What the Truck with Dooner and Michael Vint, the Dooner and the Dude.
I'm not sure what we'll have in store.
I don't know if we have it lined
good.
up yet, but I'm sure it'll be great because it always is.
Yeah,
you'll have great guests
it definitely
talking
will.
about the news and
we'll check
and
in
whatever
on,
random thoughts pop into Dooner's head.
Check in on Dooner's apartment as well.
Yes, we will.
But
And we have St. Christopher.
St.
We have an
Christopher's
update.
Fund. I was
What's
just
our
going to
update
say.
on St. Christopher
St.
Medal?
Christopher's Fund. We've had some good stuff. So social distancing to reduce the spread of the virus led to the cancellation of mats, obviously, which is a huge boon for St. Christopher's Fund, which supports truckers and their families in financial needs, et cetera. So there's some new corporate donors include PACCAR, the parent company of Kenworth, Peterbilt Motors, which gave $20,000. Its first major Class 8 truck manufacturer to donate into this, and there's been others as well. I believe Yokohama Tire Corporation donated $10,000 and is running a rebate program in which 500 people will donate $10 to the St. Christopher's Fund.
Very good. It's great to end on a high note.
Yeah, absolutely. So
St. Christopher's Fund.
Truckersfund.org. Go to truckersfund.org.
Truckersfund.org. That's all our time. Have a good one.